This week on Phil's Tax Hacks and Other Retirement Facts, things that we wish every investor knew, things that advisors wish every investor knew. We're going to do this as a 3-part series in the month of November, so make sure you check out all 3 episodes. So subscribe to the podcast, but let's get started and get into it this week here with Phil. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into the podcast. Thanks for hanging out with Phil and I as we talk investing, finance, and retirement. And we're taping this, Phil, the day of the election, so we don't have any conversation pieces to have today about that. So we're going to do a 3-part series in the month of November on things that advisors wish every investor knew, but we're going to break it up in the month. So next week we'll come back and we'll talk about the results of the election, since we won't know that probably.
Once we have the results, hopefully.
It may be a week. Hopefully we know next week when we tape. Yeah. So we'll see how that goes. But for now, let's talk about this conversation piece. We're going to break this into like 3 parts. Like I said, we got about 12 or 13 questions or so, or I guess statements or comments, things that I think advisors and, kind of wish that investors understood a little bit better for their own sake, as well as the relationship sake. So it should be a good conversation with all that good stuff. You doing all right?
I'm doing great. Yeah, doing great. Love this time of year. So. Good.
Well, except for the inundation of emails and texts and calls and stuff, but that should be ending today.
Junk mail, and that's right. Hopefully that all stops very soon. So.
Yeah, for sure. Well, let's dive into it. Let's get going. So the first one here is, you guys wish everyone knew the importance of setting realistic financial goals. And I think that's a great place to start, because sometimes us as the retiree or the pre-retiree or the end user, client, whatever you want to, call us there, sometimes we have the retirement fantasies or the retirement dreams, and that's great, but sometimes maybe they're a little unrealistic, right? So it's important to kind of make sure that we're finding a good spot to land on, and then go in and talk with your advisor about making that achievable. I guess maybe the dreams are good too, obviously, but you want to just have an open mind about realism, right?
Yeah, and I mean, when we're kind of starting that discussion, and this is always where we start, is, you got start with the end in mind, Stephen Covey. And the reality is you have to know where you're heading, right? So you've got to have those goals, and don't limit it. I always like to encourage clients to think big. I mean, if money wasn't an option, and I mean, you're being realistic, right? I mean, know what your resources are, but don't think limited to begin with. If you had a true vision of what your retirement would be, what does it look like? Let's start with that to see if we can make it work. I mean, if we don't, we'll never know, and there's nothing worse than going into retirement thinking, well, what if? Oh, I only wish, And unfortunately, you hear people all the time that they reach their 80s and have accumulated now this massive money that they will never be able to spend because they were so worried up front that, I've got to be more conservative. And it's a balance, right? It's one of those things you've got to have the realistic goals. From what are you going to spend, life expectancy, there's all these different goals that you put into the plan, but you've got to start with something realistic, but don't start limited, start with some bigger goals in mind and work through that process with an advisor to see, does it really work, right? Can I do what I'm wishing my retirement vision is? Because you don't want to start out with a limited scenario and then have regrets later on. So it's always a balance of those wishes and regrets, trying to balance it out throughout retirement.
Yeah. I think the realist in me would say, be honest and don't walk in to see an advisor for the first time and know that you haven't saved a whole lot. Maybe you're just barely at the minimums that this particular advisor has set for retirement or something, and walk in with some unrealistic plan of, traveling the world umpteen times over, and so on and so forth. And I don't think most people do that, but there is the occasional person that maybe, as they say, they go to the grocery store hungry, so to speak, right? And then they buy everything. And in retirement, you think, hey, I want to do all this stuff in retirement, when maybe fundamentally, realistically, that you're barely going to just have enough to get to retirement. So I think just keeping some realism in mind is important. But then get the numbers, and that's that's what the numbers are going to help you just understand. So
Right. Yeah. I mean, advisors aren't magicians, right? We can't make this magical thing happen if the numbers
right,
aren't there, right? So
right,
it's got to be
exactly.
realistic, but sometimes you don't know that, because people that don't work with numbers daily, they just don't kind of maybe understand the concepts. So that's why I say start with what are your thoughts? Let's start there. Let's run the numbers and see. And my goal, at least as an advisor, when I'm working with a client that has maybe some goals that are a little bit too high, isn't to say, no, that doesn't work. Sorry. What's next? It's to say, okay, well, here's the options. Because in the plan, there's always levers you can pull, right? If that's really your goal, you wanted to have X amount of spending and do this travel or whatever it is, well, then maybe you can't retire next year. You've got to push it off a couple of years. I mean, so there's a lot of different things you can change. And that's the point of planning is knowing that. And then it comes down to, well, how important is that goal to you? Do you really want that? Level of spending, travel, whatever it is, to be, is it important enough to do that to delay retirement, or do you want to, I've got to, I'm done. I just got to retire. So, well, then let's pare things back to make it work. And that's really that process. And it's the beginning, setting the goals and the plan up front, but then checking in, right? It's not a set it and forget it. I'm done. Okay. Well, got the plan done, right? I'm all good. You got to check in on a regular basis to make sure you're still on track. And does that still work based on your current
Does that still
scenario?
work? Yeah. Okay. Well,
Yep.
let's keep moving along here. So let's look at some other ones. So, a lot of advisors, obviously, it would be great if the client and end user understood the difference or the true value, I suppose, between long term and short term, right? So, long term planning versus short term planning, because both are equally important. And unfortunately, the stock
Absolutely.
market, we tend to focus on it and think about it when it's not good, when things are not going well. And we think about, oh no, what's it
Right.
doing to me? And a lot of times that's a short term vision versus the long term vision.
Right. I mean, I've had this discussion even talking about the election with a lot of clients is there's potentially some turmoil and volatility that we will see around the election. And I mean, it's nothing new. In fact, in a newsletter I just put out recently, it talked about that where, volatility in the months historically leading up to the election and in November have grown each month. But then typically in December it falls off. So any event like that, and an election is one of those known events and times that there's a lot of emotions involved, and more so in recent years, to where you're going to have some volatility. But that's a short-term event. Typically, that event itself doesn't have a long-term, at least right up front. Now, granted, yes, there is in an election very long-term potential outcomes. We'll talk about that kind of in the next podcast of, with whoever the next president is, what the policies, et cetera, that they have in place might look like. But it's not something that to be making a short-term decision on today. Because
Yeah,
that's
for
more,
sure.
a lot of times short-term decisions are emotions. It's emotion
Oh,
based.
big time.
So
Yeah, big time. And especially around something as
yep,
polarizing as this election. So it's
correct.
certainly
Yep,
easy to do,
absolutely.
right? Yeah. Okay. And then I think another piece to think about, when we're talking about these different questions or these different things that advisors wish that investors knew, is that the one size fits all approach really doesn't work. Like everybody's a 60-40, everybody can use a 60-40 portfolio and life will be great. That stuff doesn't work anymore, and it hasn't worked for a long time.
Right. I mean, there's a lot of, I call them rules of thumb in retirement, right? The 4% rule, it's, which is now like 3%. I mean, there's all these different rules of thumb. And we've talked about it before. It gets you in the ballpark. It's a good
Sure.
maybe start. Same thing here, that one size fits all. But the reality is, and I talk about this in my class, the reality is every retiree has the same moving parts, right? Everyone's got certain sources of income, at least Social Security, maybe a pension. Everyone's accumulated some money in the various tax buckets, taxable, tax deferred, tax free, and everyone's going to be paying taxes. So it's like a thumbprint, right? All of them look pretty close to the same. But the reality is, I mean, everyone's thumbprint's unique. Well, retirement's kind of the same scenario. We've all got these moving pieces, but how they fit together for you is going to be different than how it fits together for somebody else. So there isn't really a one size fits all that's going to say, well, yep, this is the strategy everyone should follow. It really is understanding your specific scenario to say, okay, well, here's my situation specifically, and what I've accumulated, my resources, my income, my needs. How does it work for me? In my scenario, what is the best combination of those over time to get the best result for me? And that's really the financial planning process, because if you follow what your coworker did, or your great uncle, or whoever, I mean, you're going to get a totally different result, because that worked for them based on their scenario.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of the Tax Smart Retiree right now.
Well, and so it really kind of leads to our last one for this week, and we're going to break this up into 3 episodes so people can kind of digest it. And that's that it's not just the portfolio. I just mentioned the 60-40, right? So if you're talking about the one size fits all, or the traditional kinds of things, and look, don't get me wrong, a lot of tried and true things in the financial services world work for a reason. They're tried and true for a reason, but there's variables and there's shifting in there. And so it's not just about the portfolio. Yes, like when you're working and you're building in your 30s and your 40s and so on, in the early 50s, yeah, absolutely. The investment side is obviously big because you're building the nest egg. But once you get closer to retirement, and I think anything over 50, you start thinking about this, certainly as you approach 55 and up. It's more than just the portfolio, Phil, right? There's all these moving parts, and they really start to truly do the the Rube Goldberg machine, right? Where you build a better mousetrap. They really do you pull one thing and it makes this thing move, and then that thing moves, and so on and so forth, right? So it's more than just investments.
Yeah, and I always kind of refer to it like building a house, right? When we're working with a client, we always start with the blueprint first, the financial plan. Let's map out these pieces together. Forget investments from a how it's invested standpoint. We need to understand investments more from a tax standpoint at that stage, knowing where the money's at and which buckets, so that we best know how to manage taxes throughout retirement. But let's understand how to make those pieces work together from a cash flow standpoint, from a maximizing income, minimizing taxes. Let's get that blueprint established first. Then let's take a look at investments and say, okay, now that we know what our cash flow looks like, what we need, what we're trying to accomplish, now let's look at the investment world and your risk tolerance and your comfort, your dislikes or likes in investments. Walk through all that process and see what fits to make your plan work. But unfortunately, a lot of investors kind of work the opposite direction, and it might just be that making that transition from being an accumulator to now the distribution side of the equation, where you're used to picking investments. It's more about investments and what's the value and all the different components that go with that, versus now we're on the other side of the equation of, well, how do we now make that money work for you? Start to spend it down. Now you got to be very conscious on risk,
and that's a big hurdle, Phil.
Affects you and all these different things. Oh, it absolutely is. Yeah.
Yeah, it's a big hurdle to make that shift, because you've spent 30 years accumulating, and now you're like, okay, what do I do?
That frankly is one of the biggest challenges I think that I try to help clients walk through when they get there, is spending the money, right? Because it's like, well, wait a minute, I've got to spend it. It's like, well, that's what you saved it for, right? I mean, because you're so used to putting the money away in that mindset. And you're at this point now where now you've accumulated what you've accumulated. So now it's time to enjoy it, right? To start spending it down, to live that lifestyle you want. And for some clients, it's not a problem. They're easy to bridge into that. Others, especially those that have been a very avid saver, it can be a difficult transition, but that's where your advisor should be able to help kind of ease you into that and walk you through the process. And just that understanding and having that plan to say, well, yeah, but this is what we're doing. At the end of the day, this is the long-term goal. So, because you're either you're gonna spend it, or you're gonna leave it to somebody else. So
yeah, exactly. Well, yeah, I mean, for sure. I mean, this interesting kind of thought, and I'll leave our listeners and viewers with this. At the end of the day, if you don't deal with this, your kids are going to, right? Your heirs are going to. And it may not be pleasant for them. It could be, more uncomfortable than you intended or whatever, just because you kind of kept putting it off. So, it's learning what you need to learn. And I get not everybody wants to learn all the nooks and crannies, and that's totally fine. That's why working with an advisor is so important. But you still want to have a basic understanding of some stuff. And that's why we thought it'd be kind of interesting to do a series of podcasts from the standpoint of things advisors wish that, investors knew or clients knew. So maybe if you're shopping for a financial professional, this could kind of give you some insight into some things to be thinking about when you go in and talk with them. So as always, if you need help, reach out, get onto the calendar with Phil, have a conversation. Check the show note details below for all the links and information. We have all that good stuff there for you. You can go to philstaxhacks.com. That's philstaxhacks.com. But again, we have all the information in the show notes descriptions there for you, whether it's on audio form, Apple or Spotify, or on YouTube. Subscribe to us on whatever platform you like using. And of course, share the information if you think it's useful with friends, family, whoever might benefit from the podcast. Give us a thumbs up and subscribe. That way you catch future episodes when they come out. Phil, thanks for hanging out, my friend. As always, appreciate you. And we'll see you next time here on Phil's Tax Hacks and Other Retirement Facts.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.